While the entire world had its eyes locked on the Iran war, the stock market was quietly being reshaped. 8 massive stories, 8 potential opportunities, and most investors completely missed every single one of them because they were too busy watching the headlines that everyone else was already watching. Your time is valuable. So let's get right into it, because the investors who come out of this period richer are not going to be the ones who panicked over Iran. They are going to be the ones who were paying attention to everything happening underneath the surface. Here are the 8 stories already moving markets and quietly setting up which stocks are about to win big. The Fear Index and how to profit from panic. Let's start with the Iran war itself, because while most people were paralyzed by it, a small group of smart investors were using it as a once-in-a-generation entry point. CNN's Fear and Greed Index has been stuck in extreme fear for 4 straight weeks, one of the longest stretches of sustained panic in recent memory. And then, in a single week, we got the perfect example of just how emotional and irrational this market has become. President Trump warned that a whole civilization could die if Iran did not back down. Markets plunged, fear exploded. Then, one day later, a 2-week ceasefire was announced. Oil dropped 15%. Stocks ripped higher. Investors exhaled. That is the market we are living in right now, driven entirely by emotion. And emotional markets create rational opportunities. The Fear and Greed Index blends 7 key signals, including stock momentum, market volatility, safe haven, demand for bonds, and the put-to-call ratio. It produces a single score from 0 to 100. 0 is total widespread panic. 100 is delusional greed. We have been hovering near 0 for weeks. As Warren Buffett famously said, "Be greedy when others are fearful." Right now, others are very, very fearful. Keep that in mind as we move through every single story in this video. Nebius, the AI infrastructure giant. Nobody is talking about. While the entire financial media was obsessing over oil prices, Nvidia quietly made a $2 billion investment that almost nobody covered. The company is called Nebius, ticker symbol NBIS. Nebius is what is called a neo-cloud company. They build AI infrastructure specifically for sovereign AI and highly regulated industries: finance, healthcare, defense. Think of them as the invisible power grid behind AI in the industries where security and compliance are non-negotiable. And they just received the ultimate stamp of approval from 2 of the most powerful companies on Earth. On March 11th, Nvidia announced a $2 billion strategic investment in Nebius as part of a long-term partnership to deploy more than 5 gigawatts of Nvidia systems by 2030. 5 gigawatts. That is enough power to run nearly 4 million homes. As part of the deal, Nebius gets early access to Nvidia's newest Vera Rubin GPU platform, the most powerful AI chip architecture Nvidia has ever built. But it did not stop there. Days later, Meta Platforms signed a 5-year AI infrastructure deal with Nebius worth up to $27 billion. Nebius will deploy $12 billion of compute capacity for Meta by 2027, including some of the very first large-scale deployments of those Vera Rubin GPUs. Meta holds an option to purchase up to $15 billion more if they want it. Now, let's talk numbers. Analysts estimate that once this infrastructure is fully built and online, it could add $4 to $6 billion in annual recurring revenue for Nebius. That would be a 300 to 400% increase from their current run rate. Management itself is guiding for $7 to $9 billion in total annual revenue by the end of 2026. That is a 5 times increase year over year. Discounted cash flow models currently calculate Nebius fair value at over $600 per share, suggesting the stock is roughly 80% undervalued today. Put another way, Nebius stock would need to 5 times from today's price just to reach fair value. Now, Nebius is small and volatile. It carries a high price-to-earnings ratio, and it is not for everyone. But the next stock most definitely is. Microsoft, a once in 13 years buying opportunity. Microsoft stock just did something it has not done in over 13 years. It touched its 200-day moving average. For those unfamiliar, the 200-day moving average is the average closing price of a stock over the last 200 trading days. It cuts through all the daily noise and reveals the true long-term health of a company. For great businesses, this line acts like a floor, the level where the most patient and intelligent capital in the world steps in. The late great Charlie Munger said it himself: if all you ever did was buy high-quality stocks at their 200-day moving average, you would beat the S&P 500 by a wide margin over time. Microsoft is down over 20% year to date, the second worst performer among the Magnificent Seven, right behind Tesla. But here is the critical difference between Microsoft and Tesla. Tesla's revenues, gross profits, and earnings per share have all been in decline. Microsoft has grown all three metrics by around 15% in a single year, from a much larger base. Fair value models place Microsoft around $450 per share, with some analyst targets above $500. That implies anywhere from 17 to 25% upside from today. A world-class company, touching a 13-year support level, down 20% from its highs. If you have been waiting for a signal, this might be it. ARM Holdings, disruption from the inside. Here is a shift that most AI investors completely missed because it happened on the CPU side of data centers. After more than 35 years of only licensing its chip designs to other companies, ARM recently announced its first ever self-branded processor. It is called the AGI CPU. This chip packs up to 136 cores per CPU and 64 CPUs per rack, designed specifically for AI inference in data centers. Meta Platforms is the first customer. OpenAI, Cirrus, and Cloudflare are also lined up. But here is the complication. ARM building its own chip puts them in direct competition with some of their biggest paying customers: Qualcomm, Amazon, Microsoft, and even Nvidia, all of which pay ARM licensing fees to use its architecture. Chips also take years to move from design to mass production, so performance comparisons with the competition remain to be seen. The real takeaway for investors is this: ARM just entered the AI chip race directly, and that could reshape the entire data center CPU market over the long term. Watch this one carefully. Story 6. Anthropic and the AI Security Revolution, 5/25 to 6/30. This next story broke in real time, and it may be one of the most significant AI developments of the entire year. Anthropic, the company behind the Claude family of AI models, just announced a massive new compute deal with Google and Broadcom, giving them access to roughly 3.5 gigawatts of next-generation TPU capacity starting in 2027. Combined with 1 gigawatt already coming online this year, that is 4.5 gigawatts total. Enough electricity to power every household in the greater Chicago metro area. Broadcom, ticker symbol AVGO, is designing the custom TPUs and all the networking equipment connecting them together under a long-term supply agreement with Google running through 2030. Years of locked-in revenue. One of the best picks and shovels plays in the entire AI infrastructure space. Now, here is the number that should make your jaw drop. Anthropic's revenue run rate is now over $30 billion a year, up from $9 billion just at the end of 2025. In less than one quarter, Anthropic went from $9 billion to $30 billion in annualized revenue. They are now out-earning the majority of companies in the entire S&P 500. And then there is Claude Mythos. Anthropic has a still unreleased model so powerful they have decided not to release it to the public at all. Mythos has already discovered thousands of zero-day bugs and exploits across every major operating system and web browser, including a Linux exploit that could give attackers full control over an entire machine. Because of this, Anthropic formed a coalition called Project Glasswing with CrowdStrike, Palo Alto Networks, Broadcom, Amazon Web Services, Cisco, Microsoft, Nvidia, and JP Morgan Chase. The goal is to point Mythos at their own infrastructure to find and patch critical vulnerabilities before criminals or foreign governments can exploit them. Two massive takeaways for investors. First, Anthropic is no longer just another AI startup. They are rapidly becoming core security infrastructure for some of the largest enterprises on the planet. Second, cybersecurity companies like CrowdStrike, ticker symbol CRWD, and Palo Alto Networks ticker symbol PANW, now have access to the most powerful offensive security tool ever built, a tool their competitors simply do not have yet. That is an enormous competitive advantage heading into the next era of AI-powered cyber threats.